Hey everybody, hope everyone's doing well. This is the Emini end of day review for Tuesday, August 20th, 2024. The context on the daily chart coming into the day, we've had this sequence of maybe 9 consecutive bull closes, bull bars. It's a micro channel and it's a spike, it's breakout. Now the overall context is big down, big up, the market's in a trading range, and this is becoming the upper third of the trading range. Buying is becoming more dangerous. You have bulls who bought lower, who are looking to take profits at the top of the trading range. We're testing breakout points. You can see the market's retesting this breakout point. This was yesterday. And look at the behavior on the way up. Trend bar, pause, trend bar, pause, trend bar, pause, trend bar. So the expectation for today is a pause, sideways day, trading range day. Even though we've had many bull bars, because of the pattern we've been getting, where there's buy climaxes followed by pauses, that's why the expectation today is another pause. We might trade above yesterday's high, but the upside might be limited, especially with the context. When you look to the left, there is a lot of reasons for the bulls to look to sell, take profits, and the bears might start looking to sell, but this is really tight and it would be aggressive to start selling against this, but bears will start building positions. And then I wanted to briefly show the Globex chart. Thought it was important and interesting coming into the day. So as we know, we've had a lot of bars not above the moving average, a lot of bull bars. And when you have that many bull bars, you need a trend line break before there's any reversal. So here's the close of yesterday, the day only session, and then here's what we have in the Globex session coming into the day. And you can see the market's in a trading range for over 20 bars. So at this point, breakout direction 50-50. Breakouts are more likely to fail, so buy low, sell high. So what's happening coming into the day? We might have a wedge. There are 3 pushes down, 1, 2, 3. Also might be an expanding triangle. So we have 5 legs, 2 pushes up, 3 pushes down. The range is expanding. We're getting lower lows and higher highs. Expectation here is a failed reversal and maybe a test of the bull channel line, the top of the expanding triangle. But again, expecting more sideways today, not necessarily another bull trend day. However, because of the momentum, the expectation for the day is trading range day or maybe a bull day, but unlikely to be a bear trend day. So that's what we have coming into the day. On bar 1, we had a very small gap up. And bar 1's a bull trend bar closing on its high. You look to the left in the day only chart, and the market's in a bull trend. When's the last time there's been a bar even closing below the moving average? Maybe bar 31 yesterday, but it's been a lot of bars. So the market's trending, and bulls will buy for any reason and scale in lower. Bar 1 is a weak sell signal bar. There's probably buyers below, buyers at the midpoint. There may even be buyers above the bar. Here's a breakout that got followed through. Maybe the bulls will get a breakout and follow through today. But in general, the expectation for the open of any day is a trading range open. Even with the trend day yesterday, you can see we went sideways for about 12 or 13 bars. So 80% of days you're expecting a trading range open. Bar 2, the bulls got follow through. It's a minimum follow through. but there's an absence of a bear body. So the bulls did the bare minimum, bull breakout and follow through. Bar 2 is a weak sell signal bar. The odds are there are buyers below for at least a small second leg up. There's not much selling pressure. I mentioned a lot of bars above the moving average. Small bear micro channel here, but immediately reversed. Again, if you look at yesterday, if you look at any bear bar, if you bought any bear bar, you would have made money. And so the selling pressure is weak, and that's continuing into today. 3, we have a breakout bar, but 2 was a bad buy signal bar. We'll probably have to retest the high of bar 2. But 4 bar micro channel, breakout on the 15-minute chart. It's a bull bar opening on the low, closing on the high. By the way, I was double checking that there's no tail below the bar and that the open is in fact the low of the bar. It's really rare for that to be the case, especially if bar 1 would have remained the low of the day, but in this case it did not, so not as important. But if it did remain the low of the day, I would normally check the CME website to make sure, just because I'm curious if the bar 1 low was actually the open, or if the open was actually the low, and that the market never traded down even a tick before trending. But again, we did not have a trend day today, so I'm less curious about that. Also, we have a big bar, small bar, bigger bar. So buy climax, pause, buy climax. Expectation is a pause, and again, probably test of the bar 2 high. 4, another pause, so bull breakout, pause bar. Bull breakout, pause bar. Maybe the bulls get one more breakout, but if they do, there's a couple of problems with that. This could be a late leg, and maybe it's becoming a little parabolic for the bulls. Here's the bull channel line, and you can see it's getting steeper here and breaking out of even this steeper one. This is becoming climactic, unsustainable. Maybe it's leg 1, leg 2, leg 3. Although in trends, not really ideal to count legs. This is parabolic, and this is subdividing into 2 or 3 pushes up. So again, 1, pause, 2, pause, maybe 3. 5, we have another breakout, and we're getting a 5 or 6 bar bull micro channel. The odds are the first reversal down will fail, and this will get a second leg up. And then 6, even more follow through. But look at bar 6 compared to bar 5 and 4, and even 3. The range is 5.25 points. That's bigger than all the bars except bar 1. So bar 6 is actually a problem for the bulls. And because it's bigger than average, or one of the biggest bars in the past 5 bars, that's because what the bulls will do with that is they'll take profits. It's acceleration, it's a surprise, and the bulls look at it as a gift. It's also the 6th bar in the micro channel. It's a common place for micro channels to pull back or even reverse. And then it's a parabolic wedge. Breakout, pause, breakout, pause, breakout. So probably going to pause here, maybe pull back. And just one more thing. What time is it here? This is the 2nd bar of the 15-minute chart, so 10 o'clock Eastern time. So here's the 2nd bar on the 15-minute chart. This is the Globex. We're sideways, getting a bull breakout, but look at the context. I said it's a trading range. 80% of breakouts fail, even if they look this strong. It's an expanding triangle, 3 pushes up. We may fail here and then reverse back down. But we'll see. Seven, strong bear trend bar. Problem for the bulls. If you think about it, you're expecting buyers below the first pullback of the micro channel. So bulls buy below bar 6. It's a strong trend bar, micro channel, good for the bulls. But then 7 is their entry bar, and that's disappointing. So if a bull bought below 6 during 7, then 7 is their entry bar, and they might use bar 8 to exit at break even if they get the chance, because bar 7 is not an ideal entry bar. They want the bar to probably close at least above the midpoint. 8, we went sideways. So at this point, what caused bar 7? Was it aggressive bear selling? It's probably a combination of bear selling, but probably more bulls taking profits. When it might be a late leg, the expanding triangle on the Globex session, parabolic wedge, 1, pause, 2, pause, 3. We're getting a bear bar. At this point, still a minor reversal, but again, disappointing for the bulls below 6, so they may use bar 8 to exit their longs. So if the bulls are selling and the bears are always selling, we may have to go lower to find buyers, and then 9 broke out to the downside. 9 is a strong breakout bar. Look at the overlap of bar 9 compared to bar 8. Probably 80% of the bar or more, maybe 90% of the bar is breaking out below, and any bull or any trader who was buying below bar 8 got trapped, and any bear who did not sell because it's a weak sell signal bar was trapped out. So now we have trapped traders above. Bar 9 is strong enough for a second leg down. What's the problem with bar 9? Well, we're testing the bar 81, bad signal bar. So 81 was a weak buy signal bar. This shouldn't have happened. We got a strong breakout. So we come back and test it. We're expecting support. But the retest, if a bull bought the retest and bar 9 is their entry bar, that might be too much momentum, and they may look to just take a scalp and probably wait for a second leg before looking to buy. And the bears, they might sell the close of 9, but it's still dangerous. It's big up, big down. We still haven't had a close below the moving average in many bars. 10, the bears got followed through, so breakout and follow through, but lots of overlap with bars, with bar 10 and bar 9. So there might be buyers below 10, and we may pull back before the second leg. $11 going a little bit sideways, lots of overlap. The momentum is slowing down. Bear breakout, pause, bear breakout, maybe a pause, maybe one more breakout, similar to the upside where there's 3 pushes separated by pauses. We may get the same down. 11 is a weak buy setup, probably limit order bears above, and there might be buyers below, but a little more dangerous when you're expecting a second leg down. 12, we have an outside bar. The market tried to break out below and above and failed. We're still going sideways. The bulls are hoping it's a final flag. It's an expanding triangle on a smaller time frame. And we get maybe one more push down and then a reversal. And the bears simply see it as a bear flag. We have a bear trend. We're going sideways. The odds favor a breakout in the direction of this trend. But again, it's probably a leg in a trading range. Big up, big down. This is not a very strong bear trend. The bears only have 2 or 3 bars below the moving average at this point. 14, so we're continuing sideways and below the moving average. That's good for the bears. Still a bad buy setup above 14, so probably limit orders selling above. And as far as buying below, really not ideal. The momentum is still fairly strong. It's a tight channel. You're expecting at least a second leg after 9 and 10. This may be the pullback before the second leg, and the bulls need a trendline break before they can buy. 14, we're going lower. Nobody willing to buy. We have to go lower to find buyers. But if you look to the left, this will be an area of support, the bar 77 low. And you can see we're vacuuming down to that price. So there may be buyers around bar 14. 14 is also the strongest bear bar in the entire sell-off. May not be the biggest, but the big bar had a big tail. Even this bar, buyers into the close, but this one closing on its low and bigger than bar 7. So this might be a warning that it's a little climactic, kind of similar to bar 6 to the upside. Same thing on the downside. Acceleration, one of the bigger bars and stronger bars coming late right into support. 15 follow through, but 15 overlapped bar 14 by a good amount, maybe 60 or 70% of the bar. So what happened during 15? Traders saw 14, which broke out. It's a good breakout bar, and there's not a lot of overlap with the prior bar, but traders don't want to sell at the bottom of a trading range. So what do? They sell a 50% pullback, and they get filled on 15 right there, and then they get a second leg. Leg 1, pullback, leg 2. So now it's 3 pushes down, 1, 2, 3, and a second leg. There may be buyers for at least a pullback, but this is a parabolic wedge. In other words, it's a tight channel, and it's a breakout on a higher time frame chart. If you look at this breakout, from bar 7 to bar 15 is a 3-bar breakout on the 15-minute chart. And it's strong enough for sellers above and a second leg. The first pullback, this was a micro channel until bar 12. So 12 was the start of the channel, spike, pullback, channel, and the odds are we'll retest the bar 11 high. When I talk about bad signal bars, bar 11 is a good example of that. This was a bad buy signal bar, but it triggered and then it failed, and it becomes a test magnet. And if we retest the high of bar 11, the odds are there were sellers in that area. The bears have a couple of open gaps. There's a gap from this breakout point to here, and there's a gap from this breakout point to the current close. 16, bull trend bar, so 3 pushes down, bears taking profits, but the bar is completely below the moving average, and it's the first bull trend bar in maybe 10 bars. The odds are it's a minor reversal. The expectation after parabolic wedges is minor reversal because it's a breakout on a higher time frame. So it might be a buy vacuum test of resistance. We're testing the breakout point, these bars, this tight trading range, low. Possible final flag for the bears, coming back and retesting it, but probably disappointed bulls buying below, looking to exit. But 16 was strong enough for a second leg. And then 17, follow through bar for the bulls, but even that bar was completely below the moving average. So at this point, still probably a minor reversal. There's been no meaningful trendline break. And even if we do go a little bit higher, bar 11 is expected to be resistance, so the upside here is probably limited. The market's transitioning into the channel phase, spike and channel. And what do bears do in bear channels? They sell rallies, and this is a rally in a bear channel. 18 outside down, good for the bears, but we're now in the channel phase, so the downside might be limited. 17 was a bad low 1 signal bar, probably will get retested. And the downside is probably limited. If we get to below bar 15, bears will probably take profits below. 16 and 17 were strong enough for a second leg, but instead of buying up here, the bulls would rather buy below the breakout. Sideways on 19, so bear breakout pause. It'll probably get a second leg. You can see it came close to testing the low of bar 17, but did not quite get there. There's a small gap. 20 did close the gap. We overlapped the tails. The bulls are hoping maybe it's a triangle and we get a major reversal. So price is getting contracted. We're getting higher lows, lower highs, but the buying pressure not very good. The bulls have one decent bar, but 17 and 20, not enough. This is still a tight channel. We need a trend line break. 21, we're going more sideways, but now we have a bear bar closing on its low. But it's in the middle of a tight trading range, and we might be at support. Remember the bar 77 low may be support. Also, it could be bar 68 over here. This could be the bottom of the trading range. The odds are the bottom of the trading range is somewhere around here, and the price action is telling you that with a spike in channel. Channels typically evolve into trading ranges. So at this point, the odds are we will go back and test the high of bar 11 before falling for a measured move of the same distance. So probably not going down here before up here. Some bears view 21 as a low 2, low 1 below 17, low 2 below 21, and it's okay to take. It's a bear bar closing on its low. The bears are now getting maybe 10 bars, maybe more, below the moving average. But you have to use a wide stop if you sell here, because we can pull back and then it would be reasonable to scale in. 22, bad follow through. We're going very sideways here. We have a doji, bull bar, bear bar, bull bar. We're alternating bars. 2 legs down, and for the bulls it might be a breakout, 2-legged pullback, maybe a second leg. And then 23 might be that second leg. It's sideways, it's not going above the prior push. So leg 1, pullback, maybe leg 2. And the bears see it as a weak rally in a bear channel. Here's the bear trend line. So it's right at the trend line, and it's a weak rally, testing the moving average, so bears can sell, bulls might give up, look to buy lower. 24, breaking out to the downside, going to a new low of the day, but testing support below bar 16 and bar 68 yesterday, could be the bottom of the trading range. It's also a third push. You could look at it as 1, pause, 2, pullback, 3. And it's a double bottom with 15, so there might be support here. 25, bull bar, bears taking profits at the new low, bulls buying for a scalp. Now the bulls are hoping this is a major trend reversal. Maybe bear trend in here, a trend line break, a bigger trend line break, 2 or 3 legs testing the bottom of the bear trend, and a lower low major trend reversal. One problem for this major trend reversal setup is that all of the bars are completely below the moving average. So the trend line break by the bulls wasn't very strong. It didn't really break a meaningful trend line, or it just barely did, but it went more sideways. And it's better if the bulls can get above the moving average, especially if they can get a bar completely above the moving average. It's just not enough bars too. It's only maybe 10 bars here. So this might lead to a minor reversal. But as far as a major reversal, it's unlikely, maybe 40% at best for the bulls. Remember, this parabolic wedge is a breakout on a higher time frame. It's expected to get a second leg down with sellers above. 26, a bull bar, but now a double top with 23 and failing to get above the moving average. But very sideways here. Tight trading range, limit order market, buy low, sell high. 27, reversing back down, but probably support below. 25, 26 was strong enough for its own second leg. 26 was a bad low too. Double top, bad signal bar, probably buyers below, scaling in lower. And then 28 went to a new low, but that's a third push down. 15, 24, 28. And double bottom with 68 yesterday. Bad signal bar, but reasonable for stop orders to buy here because of the context. And then 29 was a good entry bar for the bulls. So bad signal bar, but the entry bar made up for it. Good for the bulls. Probably going at least a little bit higher. 29 might be a leg 1 reset. Strong enough for a second leg. And then 30, really good entry bar for the bulls. Bad signal bar. The odds are it'll get retested. What are the odds we go for a measured move at this point? When the market's in a trading range, you're expecting breakouts to fail. So even though this looks strong, and you may argue, bear trend, trend line break, weak retest of the trend's extreme, lower low, double bottom, maybe wedge double bottom, and then a good bull breakout. The bulls might have a 40% chance here. With the momentum, maybe it's 50-50 at this point. But the bulls have to keep the momentum and keep going because this is a breakout on a higher time frame. You're expecting sellers above. Where's the 50% pullback of this breakout? We might be rallying right to it. So it's okay to buy, but you have to realize, what's this red line? The bar 11 high. So if you're buying here, you're buying at resistance. And this might be a buy vacuum test of resistance, even though it looks like a strong breakout. Decent looking bull bars, In a trading range, especially when you've had more than 10 bars below the moving average, the first reversal up will likely fail. But it's good for the bulls. It broke the trend line. But now they need a major trend reversal. 31, bad follow through after 30 at the top of the range. The bulls see it as bad follow through, but they also see it as a weak reversal attempt of this breakout. Probably get at least a second leg up. And then an inside bar 32. High one buy, but at the top of a trading range, not ideal. And much smaller than the prior bar, where there's probably sellers above, maybe buyers below for a second leg. And then 33 outside down. So the bulls got their minimum second leg. We rallied, pulled back, rallied, and then sold off again. So second reversal below 33, top of a trading range. And any bull who bought the close of 30, disappointed with 31, might have used 32 to exit, and then everybody sold on 33. The bulls got out, the bears are selling. So now an implied second reversal at the top of a trading range, and 33 is a reasonable signal bar. Also the first gap bar in about 20 bars. It's a variation of a 20 gap bar. It's not like it's a strong bear trend, but the bears did accumulate a lot of bars below the moving average. So the first reversal will probably fail, and the bulls don't necessarily want to buy below 33. It's a bad signal bar. 34, breakout for the bears. Look at the overlap with bar 34 and 33. Here, only 20% of the bar is overlapping the prior bar, so this is a decent breakout. The bears see it as a leg one. There's no legs before it. This is a completed price structure. We have a spike, channel, trading range, and then a new breakout. So leg one breakout, and follow through, crossing the moving average, 34 closing on its low. The odds are it's going at least a little bit lower and getting a second leg. Overall, it's also more bearish with all the bars below the moving average. This breakout being the dominant feature of the day. Remember, the day started at bar 1, not down here. So the rally was okay, but it was a parabolic wedge, and it was smaller than the sell-off from 7 to 15. So context, reasonable for the bears to be short or look to sell a pullback. And then follow through 35. Bad high one, sellers above, maybe buyers below for a deeper pullback because it's a trading range. 36 inside bar. Bulls hoping it's a reversal. It's a deep pullback for the bulls, leg one, deep pullback, second leg. If you think about the bull case here, if a bull bought, let's say they bought the close of 30, and they're disappointed, they buy more above 36. They might just be looking to get out at their average price, this red line. And that will be an area of resistance, temporary resistance. 37, breaking out but failing for the bulls, close below the moving average. So now for the bulls, if you bought and you're disappointed and you're scaling in, the market is not racing back up to your average price. You may be getting a little nervous. You know this breakout was strong enough for a second leg. Maybe this is a two-legged pullback. There might be more sellers above 37. 38, a micro double bottom, 36, 38. Good signal bar for the bulls, but bad context. This is probably a continuation pattern, even though it looks like a reversal, a high two. This breakout was strong enough for a second leg down. This is not good buying pressure. This is a lot of overlap and dojis. 39, more sideways, bad signal bar for the bulls, probably sellers above. Outside up on 40, but now maybe 3 pushes up after the bear breakout. 1, pause, 2, pause, 3. So 40 might also have more sellers above, just like 38. And then outside down 41 might be the start of the second leg down for the bears. Probably sellers above, probably going at least a little bit lower. 42, breaking out, so breakout bar, follow through, but now we're getting to the bottom of the range. We'll probably go and test the low of the range, but the downside here is probably limited. Maybe the bears look for that measured move. Maybe they start using the bodies at the open of 33 to the close of 34. And then 43 would have reached that target. It also would have reached that target. So you'll probably have profit taking by the bears here. 2 legs down in a trading range. 1, complex 2-legged pullback. 2, where the second leg subdivided into 2 legs. So for the bears, this acceleration on 43 is a problem. Biggest bar, let's see, 7.5 points, 6.5 points. So 43 is the biggest bar in this leg. It's breaking out far, it's climactic, and it's just like bar 7 and 14. That acceleration late in the move is not good. It's occurring in a late leg. 1, 2, 1, 2. And it's a trading range day. The bears will use it for profit taking. Best case for the bears, maybe it's a channel, but we might be breaking out of the channel line, which is also low probability, so a good place for the bears to take profits. So a bull bar 44, most likely due to bears taking profits, but reasonable at this point for bears to get out of shorts. Stop order bulls might buy above 44. 2 legs down, nested. This was a trading range, an area of agreement. Trying to break out below, probably test the high. And it's a good signal bar. 45, but 43 was a bad signal bar. 44 was the entry bar. Probably test the high of 43, which we did on 45. But 45 might be a pullback from 44. Breakout, pullback, maybe second leg. 45 a low 1 signal bar, but it would be a third leg, 1, 2, and if it triggers 3, low in a trading range. Buyers below 46, but going sideways. The bulls see a bull flag, and the bulls also see a major trend reversal set up. Bear channel, trend line break, 2-legged retest of the lows, lower low, major trend reversal. Overall, probably a trading range day, not a bear trend day. Too much sideways here, big up, big down on the open. So we'll probably actually close somewhere around the midpoint of the day or the open of the day. So here's the open. And you can see the midpoint is the open of the day. 48 getting a bull breakout, leg 1, pullback, leg 2, probably going at least a little bit higher. Nothing for the bears to sell. 48's a low 2, but a bad signal bar. Buyers below. 49 inside bar, but still we're low in the range. For the bears, it's really not ideal. They'll probably wait to sell higher. 50 triggered the low 2, but buyers below. Bad entry bar for the bears. And for the bulls, it's a complex 2-legged pullback. Bull breakout, leg 1, pullback, leg 2. So it's a high 2 for the bulls. 51 breaking out above 50. 50 is a bad signal bar. It'll probably get retested. But if a bear sold above 50, they're disappointed with their entry bar 51. So that makes the high of 50 support. And this might be a final flag, tight trading range, late in a bear channel. And then follow through for the bull breakout. And it looks like it retested the high of 50, but did not quite get there. So there's a little bit of an open gap. Trap traders below. Good for the bulls. Also closing above the moving average on 52, good for the bulls. 3-bar micro channel, bad sell signal bar, buyers below, probably going higher. 53, bear reversal bar, but 4-bar micro channel. The bears see it as a low 2, 1, pullback, 2, or maybe 3, 1, 2, 3. Good signal bar, but bad context. Low in the overall range. We know the open of the day will probably be a magnet, and at this point in the day, or at this point, the bears have lost momentum. We're going more sideways, we're drifting sideways. We've been low in the range, and the market might have to get vacuumed up to the top of the range before we find traders willing to sell. 54 triggered the stop order, but bad context, so bad entry bar. We're continuing to drift sideways to up. Bull breakout, outside bar, 55. Closing on its high, good for the bulls, probably going at least a little bit higher. There might be minor resistance here. More major resistance up here. Breaking out and follow through, 56. Breaking out above here, not closing above, but strong enough breakout for a second leg. It might be 3 pushes, but it's a tight channel. The first reversal down will probably fail. Buyers below 56, 57. 57 is continuing to the upside. Vacuum test of the open of the day. And the biggest bar in the rally since bar 44. So the bar being big, the fact that it's testing the open of the day, there might be profit taking in this area. Also, remember bar 32? 32 was a bad sell signal bar, and then we got a breakout and follow through. So anybody who sold here, or anybody who did not sell here because it's a bad signal bar, and you may get a second leg up, they were trapped out of a good trade. The bulls who bought were trapped into a losing trade. So on the retest, we're expecting resistance. 58 breaking straight through the resistance, good for the bulls, but now testing the top of this trading range. But look at the breakout, 4 bar micro channel. The bars are uniform in size, very little overlap with all of the bars, all the bars closing near their highs. There's a lot of things going for this breakout. The context is still bad for the bulls. The upside might be limited because it's a trading range day, and we're getting climactic, maybe in the upper third of a trading range. 59, more follow through, good for the bulls, but possibly a late leg. 1, 2, 3. As strong as this looks, if it's leg 3, that's a problem for the bulls. 60, bear, trend bar. It's an inside bar, bad high 1, probably sellers above. It's by the close for the bulls, but as soon as they get 60, it's no longer by the close. And if they can, the bulls will try to exit at the close of 59. And then consecutive inside bars at the top of a range, maybe 3 pushes up. The bears will see it as a reversal setup, II breakout mode, top of a range, but really tight channel, strong breakout. The bears probably need at least a second reversal. They should get a second leg up. 62, outside bull bar, but trading range bar. The bulls now have 3 bars that have not tested the close of 59. And just like back here on 30, if they were not quick to get out here, if they saw the market go against them for a couple of legs. So same thing could be happening here. Now 4 bars without testing this red line. The bulls are trapped, and we're getting a little bit of an endless pullback, strong enough for a second leg, but we're getting lower highs, lower lows. Good for the bears. Micro double top 63, bear bar, closing on its low. You're still expecting buyers below and a second leg, but the problem is when you're at the top of the trading range. Kind of like down here, 3 bar micro channel, good for the bears, but the context, you're at the bottom of a trading range. So sure, there might be sellers above 43 for a brief second leg, but it could be very brief, and in this case, it was more sideways than down. So we could be seeing the same thing to the upside here. 64, we have an implied high 2, implied high 1, 61, high 2, 64, but micro channel, 5 bars, probably sellers above, disappointed bulls. Bear breakout, it's an outside bar, 65, but look how much the bar went below the prior bar compared to above. This is a more bearish outside bar, despite the big tail below, despite the fact that we're above the moving average. Bad buy signal bar, and more of a bearish breakout, probably sellers above, disappointed bulls, trap traders above. 66, this is becoming an endless pullback, and the expectation after a bull spike and a pullback, you're expecting this to be a bull flag and get a second leg, but the more bars that get added, this is becoming a pain trade where the low probability event happens. This is strong enough for a second leg, but the bulls are not getting it. We're going more sideways, another outside bar. 64 IOI to 66 breakout mode. The bears are looking for a reversal. This is possibly a late leg at the top of the trading range, but this breakout was so strong, I suspect there are buyers below. We might have tested the midpoint here. We're going sideways around the midpoint. Even if we do get below bar 55, there's probably support below there. Another doji added to this pullback, so lots of bars sideways. Good momentum for the bulls, but it completely disappeared. And this is not particularly strong for the bears either. It's more of a bear channel, so low probability of a bear breakout. Plus it's a bull flag, so a couple of reasons you're not expecting the bear breakout. 66, another trading range bar added. Breakouts are failing. We're getting a lot of bars sideways. Limit order market. Another breakout attempt, but failing once again. Maybe 60, 65, 70, a wedge. But the buying pressure through here is not very good. There's been one bull close in this entire 10 bars. So not really good for the bulls, not ideal. Bulls who bought 59 looking for any bounce to get out at break even on their entire trade. So maybe they bought the close of 59, buy more above this reversal bar, high 3. They look to exit at the red line, their average price. Bull breakout, but failure, more sideways, but low 1, bad context, probably buyers below. 72, bear bar, but bottom of a bear channel after a strong bull breakout. The odds are there's buyers below. And the bear breakout is low probability. 73, reversal bar, high 4 or high 3, 1, 2, 3, good signal bar. And bears might exit above 73, bulls might add on above 73, looking to get out at their average price. Bad entry bar, so if you bought above 73, that's your entry bar outside down. However, the stop probably goes below 55 at a minimum, if not way down here. So you don't get stopped out below 73. It's a small signal bar. Small signal bars, the stops get run on small signal bars all the time. So that's a skunk stop if you buy above and put a stop below. Probably buyers below the bar. 75 breaking out, but it's a reversal bar, about half the bar overlapping the prior bar. So not very good. It's more of a channel. Probably buyers on the close of 75. Bears taking profits. Bulls buying to get long. And then reversal 76, closing above the moving average. It's a strong bar. Good for the bulls. Probably going higher. And then bear reversal bar on 77. You can see we came close to the average price for the bulls, but did not quite get there. So the bulls might be trapped, taking anything they can get, taking a small loss on their trade when they bought up here. This is an endless pullback, which is a bear breakout. It's time control. No very strong bear bars in here, maybe 60 and 72, but they're average sized or small. But look how many bars the bears controlled the price for. That is strong enough for a second leg. It's possible this is leg 1, pullback, and 77 is leg 2. In a trading range, you can get the channel and then the spike. Buyers below on 78. Also getting very late in the day. Not really worth doing anything, but probably support below 75. Maybe the start of a trading range. Strong bull breakout, buyers below. So support below here. Limited downside. Now a double bottom, 75 or 76 and 78. Good reversal bar for the bulls. But after a stronger bear reversal bar, 77. So the upside is probably limited. Lots of sideways bars. It's a limit order market. So you buy below and sell above and scalp. Sideways on 80. So we got a bull breakout, but then no follow through. That's bad for the bulls. Probably more sellers above the bar and more sideways into the close. And then 81, a little more to the upside. For always in today, coming into the day, the market's always in long when you look at the prior day, the day only session. However, if you're looking at the Globex session, you know the market's in trading range and it's buy low, sell high, and scalp. So what Al says, coming into any day on the open, no matter how strong a breakout looks on the open, there's a 50% chance that the breakout will fail and reverse, go the other way. And that's why I showed the Globex chart in the beginning of the video. Here's the 15-minute. And the two bull bars on the far side of the screen, that's the first 6 bars on the 5-minute chart. That was the parabolic wedge, the 6-bar micro channel. Looks like a great breakout, but look to the left. Expanding triangle, 3 pushes up. And what do we know about leg 3? We know that leg 3 is a late leg when you consider the market cycle. When you consider that most breakouts of channels fail, there's about a 25% success rate. This is a bull channel and a bear channel. That's an expanding triangle. Expectation is breakouts above will fail, breakouts below will fail. So even though the rally on the open looked pretty strong, there were problems with it, including the Globex context and the structure of the breakout. Breakout, pause, breakout, pause, breakout. Compare that to this breakout. This is a much stronger breakout, however the context, not great either, but always in coming into the day. It's confusing because it's a bull trend. You might argue it's always in long. Bar 1, breakout, follow through, bar 2, so okay to be long, but then you get bar 7, reasonable to get out below 7, especially considering the overall context, overnight session. It's a trading range, so this could be a vacuum test of the top of a trading range. Probably always in short on the close of bar 10, big bear breakout and follow through. And still always in short through here. This is really minor reversals. The 29.30 is a strong enough minor reversal that we know the market could reverse, but we might have to get a retest of the lows first. The expectation is not a bull breakout and bull trend after a parabolic wedge that hasn't had a trendline break until 29.30. So this is the first trendline break. Expectation retest of the lows. So when you get consecutive bull bars, 29.30, it might be always in long for a brief period, but overall, in a trading range, remember the bar 11 high, spike, the start of the channel, the pullback, the channel evolves into a trading range. Buy vacuum test of resistance. This is the top of a trading range, so even though it's consecutive bull bars, the close of bar 30 might actually be always in short, and then the bad follow through 31 maybe confirms that. Certainly always in short on 34, bear breakout and follow through, leg 1, top of a trading range, probably going lower. After 2 legs and then a bull bar 44, reasonable to get out of shorts. So this might be an always in flip, 2 legs down and big 2 legs down in an overall trading range. I think it's reasonable to get out of shorts above 44, and maybe you buy with a wide stop scaling lower. And then 3 pushes up here. As strong as this is, it's reasonable to get out below a bear bar, closing below its midpoint. But not clearly always in short, still always in long here. But then endless pullback, you start getting 3, 4, 5 bars against the breakout. The bulls are getting trapped. But mostly trading range into the close, trading range all day, so always good to think buy low, sell high. Stop order trades today, I thought it was okay to buy above bar 1, bar 3, 4, 5. You're buying momentum, and as soon as the momentum fades, you have to think your premise is no longer valid. If you're buying momentum and then you get bar 7, there's no more momentum, and you probably have to get out. You could sell below bar 10, bear breakout and follow through, or low 1 below 13, but not ideal, bad signal bar. And through here, lots of limit order trading, not good for stop orders. I thought 28 was reasonable for stop orders. It's a reversal bar, it's the minimum for the bulls, but the context was good, spike and channel, and you're probably going to test the bar 11 close or the bar 11 high. And then a low 2 at the top of a trading range, so it's a nested low 2, micro double top with 31, 33. double top with 12 and 33 or 31. Outside bar, decent. Signal bar, breaking out more to the downside below the prior bar than above, good for the bears. And then there's a low 2, sell below bar 39, stop above 33, 4-second leg down. I thought it was reasonable to buy above 44, scale in lower, and then you could buy above 51, 52, bull breakout, follow through. And then here, 55, good bar for the bulls, tight channel, you can buy above. Becomes by the close, but then you get 60. Similar to over here, you're buying momentum. When the momentum fades, your premise is no longer valid. You get out below a bear bar, closing below its midpoint. Hard to sell 60 after such a strong breakout, so it's okay to not take that stop order, sell. But there's a second reversal on 63 you could sell. And then a tight channel all the way down. Really not great for stop orders down here. Maybe a second reversal, 78. Consecutive sell climaxes and then a double bottom. But late in the day, not really worth it. Limit order trades today. Buyers below 6, but failed quickly and they got out and they bailed out. Sellers above 11, bad stop order. Sellers above 15, another bad stop order. All through here, limit orders. Sellers above bars, betting a minor reversal, but then buyers below swing points. Bears sell rallies, take profits at new lows. Bulls buy at new lows, and they scalp. And all through here is minor limit order market. Sellers above, buyers below. There's a limit order sell up here, although you may not just blindly sell when you get these big bull bars. You might wait for the disappointment on 31 and then sell the high of 11 during bar 32 or 33. Inside bar 36, high 1 after a strong bear breakout, you could sell above it, you could sell the high 2, betting the reversal will fail. It's a continuation pattern. And then I mentioned selling above 43 was not ideal. 45 is a low 1, bad context, you could buy below, bad stop order, good limit order. Same with bar 49, bad low 2, you could buy below. Micro channel, first reversal down will probably fail, tight channel. Small signal bar 53, you could buy below. Up here, you can buy below 59, similar to buying below 6, but the context not great. And if you do buy below, you're disappointed. All through here, bad high 1s, you could sell above 64, you could sell above 66, 67, high 2. This is a tight channel. Weak selling pressure, endless pullback. Sells above all these bars. 76 finally strong enough for a second leg, but buyers probably below the bar, and they get triggered on 78. And for the day type today, we had a trading range day. And you can call it a bear trading range day. This was the dominant feature of the day, a big parabolic bear breakout, and the market closed slightly below the open, although not by much. Here's the open of the day, and here's the close, just a couple of ticks below. So mostly a neutral day. But the bears can say they claimed the close and closed below the midpoint and disappointed the bulls on the buy the close rally on the daily chart. So where do we go tomorrow? Disappointing bar. Probably going to pull back, but the first pullback will probably get bought. So we may trigger the low 1 below today's low, but find buyers below. The buyers may not come in until some other support and resistance, maybe this swing point high. So maybe we go a little below the low of today. And then if we go above today's high, there's probably sellers above. It's a trading range, so buyers below, sellers above. These support and resistance areas will be important magnets to keep an eye on for tomorrow. And as always, please feel free to leave questions for me in the comments and include timestamps for any questions specific to this video. And with that, I hope everyone has a good rest of their night. Thanks for watching.